This is Scott Pulsini with scottpulsinitrader.com, and we're going to go over the setup gap VWAP fail. First, I have to read this disclaimer. We are not financial advisors or a broker dealer. Neither scottpulsinitrader.com nor any of its officers, employees, representative agents, or independent contractors are, in such capacities, licensed financial advisors, registered investment advisors, or registered broker dealers. Scott Pulsini Trader does not provide investment or financial advice or make investment recommendations, nor is in the business of transacting trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation. Nothing contained in this communication constitutes solicitation, recommendation, promotion, endorsement, or offer by scottpulsinitrader.com of any particular security, transaction, or investment. Securities used as examples. The security used in these examples are used for illustrative purposes only. scottpulsinitrader.com is not recommending that you buy or sell the security. Past performance shown in examples may not be indicative of future performance. Return on investment examples. The securities used in these examples are for illustrative purposes only. The calculation used to determine the return on investment ROI does not include the number of trades, commissions, or any other factors used to determine ROI. The ROI calculation measures the profitability of investment, and as such, there are alternative methods to calculate and express it. All information provided are for educational purposes only and does not imply, express, or guarantee future returns. Past performance shown in examples may not be indicative of future performance. Investing risk. Trading securities can involve high risk and loss of any funds invested. Investment information provided may not be appropriate for all investors and is provided without respect to the individual investor financial sophistication, financial situation, investing time horizon, or risk tolerance. This material may not be reproduced or distributed in whole or in part without prior written permission of scottpulsinitrader.com. Any other reproduction or distribution in whatever form and by whatever media is expressly prohibited without the prior written consent of scottpulsinitrader.com. So this set up the gap VWAP fail. This trade focuses on stocks that gap up or down at the open and fail to hold the VWAP in the direction of the gap once moving to the other side. If stocks are truly strong or weak in the direction of the gap, they should not be able to stay on the other side of VWAP for long. Once stocks get to the opposite gap side of VWAP, there typically is a cover enough position as many traders lean on VWAP for their stop level. Price has to stay on the opposite side of VWAP for at least 15 minutes to take this trade and must have heavy resting liquidity come in near VWAP to lean on with a stop just below the liquidity level. I usually give this trade at least 2 attempts, and if I get stopped out on the first attempt and the market moves swiftly back against the opposite side of VWAP again. So I'll show you some examples here. So the whole idea of this trade is that, again, if a market gaps in a direction on the open, then it should never be getting above or below VWAP in the opposite direction of the gap if the gap is legitimate, right? Especially with these big funds and these other players playing the VWAP, waiting for it to return. If the gap is legitimate, they should never be able to get above or below and hold the VWAP. So that's the whole philosophy with this trade. So when you use the bar charts to gauge that, and then you use the liquidity from Bookmap to confirm your areas and lean on those areas for excellent risk reward. So our first example is MCK. This was on 10/21/19. MCK gap $2 lower on pre-market negative news and moved another $4 lower at the market open. I saw a 15-minute hold above VWAP, which is opposite of the gap down, and I moved back to VWAP from where there was the heavy resting bid liquidity at 146.30. I bought once I saw buyers coming at 146.59 and risked the trade down to 146.20. Market moved swiftly to the high volume node of the balance area it broke down from, where MCK failed at the first heavy liquidity, where buyers failed to push through and exited the remaining position on the second attempt at the high, where heavy buying stalled and heavy offer liquidity came in at 152.60 to 80. This trade was risking 39 cents to make $6. So this was the trade. So you can see here, this is the 30-minute bar chart, but this was the area, the balance area that it broke down from. Gap down. Here's the gap, and then so the market sold off hard in the beginning of the morning, and then around 10 o'clock, this is Mountain Standard Time, it got above VWAP and held above VWAP. So this is a 2-minute chart. This is a 5-minute chart. I just have the annotation here that it is holding above VWAP for 15 minutes. And then what it looked like on BookMap is it moved above, and then when it came back down, this was the hold above, and then it came back over here where the resting liquidity started to add on right at VWAP, which is right here. So when I saw that resting liquidity, and I don't have this on this chart, but when the buying initiated because of this liquidity, that's where I got in. So I got in, right around here, risking. I got it right around 146. I think it was 146.50ish, and then I was risking down to 146.25. So again, if it can't hold above this liquidity and VWAP, which were confluent, then I'm out of the trade. If it would have broken through, got back above, I would have tried it one more time, because many times you'll see a flush through VWAP, because these algorithms or these funds know that a lot of traders lean on VWAP, and they know they can run the stops, and then it turns around and goes. So I'll give it 2 different attempts, for the trade. So this was this is what happened after I entered. So this was the VWAP trade here. Obviously, this is condensed now because of just to show this ridiculous move, but when it the move to happen actually happened here. So I was in over here and kind of just balanced for a little bit, and then again, this is a 2-minute chart, so it balanced here above VWAP, which again is another good sign, and it just kept bouncing off the liquidity, and then it just rips. This particular instance was news driven, but it doesn't matter. I was in the trade, and I got lucky with this quick of a move, but a lot of these moves will end up going $5, $6, $7, especially depending on what the average true range is for the stock. So you can look that up on your own. But again, I'm playing more off of liquidity levels, and I was looking for, if I was right on this trade, I was looking for a stall in the high volume node of this balance area. So the high volume node again is where most of the trade transacted, which is right around here, basically the middle of this. It came up, tried to rip through, put in a selling tail, and then when it came back up here, I was out. So I'll show you. Again, this doesn't show the whole story. You need the book map to see where you need to exit, which I'll show you here. So this is the area I got long down here. It just blew through all of this liquidity immediately. I knew I was sitting pretty at this point, and then just ripped. Sellers try to engage here, no dice. I mean, it's great that they're trying to sell, but unless the market starts to pull back, you have no worries. You just hold on until you can see an actual pullback. So, the buyers, so basically these guys that try to sell, you can tell they just turn around and puked it out, and then ripped through here, kind of stalled here. And when I saw it get up to this liquidity that had been resting for a long time, which was obviously a lot heavier than this one, I saw the buyers engage. Again, I would have held it even higher if it could have got above, but then the sellers came in, so I exited half the position. I just wanted to see what it did, when it returned down to this area, and lo and behold, it returns down right to the area the guys tried to sell initially. So whoever's still remaining that held their breath, they got lucky. It came back. They got out of their position, and then it moved back up here. So once it moved back to this area, I was originally focusing on this area, but now I see this huge buying, which is equivalent to some of these buyers, and then just not even a budge in this liquidity, and it actually refreshed. And so the minute I gave it a shot. If it could have gotten through here, I would have definitely held it and put my stop here, but they tried to buy it here. The sellers came in. I was out. So again, I was risking. I risked 39 cents at the time to make $6 on this trade. So the next example is AXSM. This happened on 12/16/19. The bigger picture relative our fundamental news was AXAM gapped higher on positive phase 3 depression results. Saw close to a 15-minute hold above VWAP and shorted when I saw a heavy offer lick come in at 80.20 and $80. Sold when it bounced off of liquidity, and liquidity actually increased, and I saw aggressive selling start to come in. Watched it rip down $7 through multiple liquidity levels and covered once I saw selling fail near 74. And then aggressive buyers pushed it through the last liquidity level and moved through on the way down. I risked 70 cents on this trade to make $6. So you can see here, again, this was a huge gap up on the positive news, depression results. And again, if this gap is legitimate, this should not trade below VWAP. I mean, this thing opened up and it was immediately below VWAP. And this is an excellent confluent sign when you see this extremely heavy volume on this sell bar. This could be a signal in itself. You see a sell bar and then it moved back to the middle of the bar. If you see any liquidity in Bookmap, you can short it. But now this is confluent with VWAP as well. So when it moves back to VWAP, short it. And then, so this is what it looked like. So this was that move up. It ripped down through that. This was that heavy bar here. Actually, this was the heavy bar here when it moved back up to here, 738. I just want to make sure I got this correct. Yeah, so it was right here, right above 80. So this is where VWAP tried to pull back up, failed, came down here. I'm sorry, I don't have this part of the chart right here, but it's not important for this example. Liquidity was here and liquidity was here. When I saw it come back to VWAP, which was this here, this area here, this time period here, I saw this liquidity here and I saw this liquidity at 80. So this was just above, this was right at VWAP and this is right below. So again, a lot of times it's not going to get exactly to VWAP. I mean, where the liquidity is, but if you see liquidity at VWAP and then you see more liquidity come in, now you have two different layers of liquidity that you can lean on. So again, you could aggressively get short here, but I like to see these buyers fail because a lot of times this thing will just go buy right through all this, right? So I want to see them try to buy it. I want to see this liquidity refresh. And then when I see the sellers, now I'm in, right? So I got in right around 79.60. I'm risking up to about 80.30-ish, right here above. Again, if it blows through both those liquidity levels, I don't want any part of this trade, right? I'm wrong. And you get out, you lose your 60 cents, and you move on to your next opportunity. So on this one, it actually sold off and then just absolutely ripped down. So this was where I got short, ripped down. This was right around 80. Where did I get short? Yeah, 79.60. Moves all the way down to right around 74. And where it bounced was confluent with the DVA low. I'll pay attention to that, but again, I'm not getting out just because there's a line here. I'm getting out because if I see problems with liquidity and sellers struggling to get through liquidity, which I did, right? So these were the moves. This was the move straight down from the 79.60 where I shorted. That's up here, and you can just see it blow right through all of this liquidity. There is no reason to even consider getting out of this trade until you can see some buyers fighting back, right? I mean, through this liquidity, this liquidity, heavy liquidity, just right through it. I mean, you see a little blips of buying, but it means nothing because it's not responding. And, you get a couple buyers here, but again, I want to see. I'm not worried. I just caught a huge move in this trade. If I see it start to trade above this, right? Like if it would have come here and moved back above, then I would have, got out. I would have made $3 on the trade, right? But I gave it a little room, and then, I saw it come down to the low right around 73. Buyers came back, and now, the next time the sellers come back in, and now here comes all this bid liquidity back, right? So now I'm paying attention. Again, I'm still in it because I got a portion, but the second half I'm still in because I want to see it get above, if it can get above these areas. And again, you want to pay attention to these prior liquidity areas and what it does when it comes back, right? So here's a perfect example. Buyers engaged as it came back to this area. Liquidity was put back in. They hammered it, rejected, right? So I think I'm okay, and now I'm expecting to move down to this liquidity. That did not happen, but it's just showing you that there's something amiss, and you got to be ready to cover this trade, right? So it comes down. Sellers try to engage, nothing. Try to engage again, nothing. Buyers come in again. Sellers try to engage again. Well, not one of these three times could it get down to even get down to this liquidity, which I would have probably been out if it struggled at all. But now I got to make a decision, right? So the minute I see the buyers come back in, and then it gets above this liquidity that's resting, which was also, again, where this liquidity was, I'm out right here, right? So I made, close to, um, again, I sold some over here, or I covered some over here, and then I covered the rest here. It was an average of about $6, $5.75, $6. But the point of this is to, you know, you don't want to just get out because you have a profit. You want to wait and see, these buyers winning, and they, lo and behold, the sellers can't push it, and then here come the buyers. You're out. Huge trade, risking 60 cents, and you made, I made almost $6, which is that's how you make money trading. So my next example is Microsoft. This was from 1/30/2020. Microsoft gap higher to an all-time high near 176 in pre-market trade, beating EPS estimates by 13% and revenue by 3%. Microsoft sold off on the open on over 7 times relative volume, retesting VWAP twice into the high relative volume conviction bar, holding below VWAP for close to 20 minutes before the second attempt. Ran into heavy refreshed liquidity, and an aggressive seller immediately came in. Market pushed through 172.50 and then tried to push through 172 where liquidity was taken out, but sellers couldn't sustain. Buying came in around 172.20 where a cover was warranted, risking 40 cents to make $1.10. So again, this is quote unquote great news. They crushed earnings. The average trader is pummeled on this trade, right? The market opens, they're like, oh, I want to buy this, and it just rips through, right? So it rips straight down on this move all from here from 174 down to 172 is an extremely heavy volume. It was 7.6 times volume. So so this is the 2-minute chart, this is the 5-minute chart. So I actually I like to see 15. My rule of thumb is 10 to 15 minutes. You want to see holding below VWAP. But when you get instances of these types of tails where it just can't get through. Actually, I'm sorry. This was 15 minutes. The next example is where I it's cheated a little bit. I got in a little early, but sorry. So this was this tried to move above VWAP here and then here. So I shorted on the second attempt, which was almost 25 minutes below VWAP. Again, this is confluent with I put additional variable in. If you can add additional variables to the trade to make it stronger, it's even a better trade. So I'll trade VWAP whether this was a high volume bar down or not. As long as there's liquidity here, which I'll show you. But now you have the added factor of the liquidity. The high relative volume on this move down. So all of these traders that were buying in on the open, you have to think like you're that trader. If that market comes back, you want to get out of that trade because these guys get run over. So the minute it comes back, this is why it struggles, because then these guys that got run over, they went out. And then you add in the guys that trade VWAP on the other side of VWAP, you're shorting it. Now you have a double whammy. So that's kind of the methodology or the mindset behind playing into bars, high relative volume bars, because you got guys that are praying it comes back so they can get out because they got run over. So this is what it looked like on Bookmap. This was the first attempt here. That was here, but again, this wasn't. I actually didn't take this trade here. This was only 10 minutes, almost 15 minutes below VWAP, but it wasn't quite at the time, so I kind of waited. Again, I see the buying here. They take out liquidity, but it's immediately wrong, right? So kind of balances here, can't get through this liquidity, finally does. Then one more attempt, again, takes out liquidity, again, immediately offsides. So I have the annotations or connotations. A second attempt to try to break through VWAP met with heavy liquidity and the heavy buying that was immediately rejected. Entry and first aggressive selling. So the second I saw this, again, I was waiting to see. I was expecting it to blow through. Again, this was positive news for the stock, and you know, why can't it get above this area? And if it would have blown through, then I just would have watched. But again, it didn't. This is a great trade. I sell here. Again, you have the confluence of this bar, this heavy volume, with the VWAP, with the liquidity here. So I'm in here. I'm risking above here. So this is 173.20. I was risking about 173.60ish. Again, which is above here. If this market comes up and blows through here, then I want no part of the trade. So sellers engage. Gets down through this liquidity level. Looks like buyers might, and I actually got out of a piece here just because it kind of, the buyers kind of stepped up right here. I got juked a little bit, and this is going to happen sometimes, you know, and that's why you get out of pieces of your trade. You don't have to get out your whole trade here. Again, you have a nice profit, give it a chance, right? So I got a little bit here, and then sellers came in again. Now this was a different story, right? So the aggressive sellers took out this liquidity level, but you can see the selling kind of dry up here. The liquidity level's gone, and there's no push through, right? So then the buyers re-engage here. I got out, you know, when I saw this, I was out of the whole trade. So I was, again, risking what was it, 30 cents, 35 cents-ish to make. I got it at 172.20, so we're talking, a little over $1. So again, great risk reward. You're talking about four times your risk, and that's what makes trading. And you can use these levels to, have a great risk reward. So, for people that like to trade the balance areas, it did come back to the bottom of this balance area where it broke down from, which was this same thing where it broke down from when it retraced to here. There's nothing to do here, but then when you see the sellers come back in, now you see the liquidity come back in and the sellers re-engage. You could technically have gotten back in. I did not. But again, this just shows you ways that you can re-enter the trade. Just because you get out here, it doesn't mean you can't get back in if you see something that shows that the sellers are back in control, right? So if you see this liquidity, see this, you can get back in, 172.60, 172.50, and risk up to 172.75 again, or even up to here. If you're convinced. So I did not do that, but I'm just showing you how there's ways to, get back in for a portion to see what happens. And lo and behold, it comes down. This time it does break down through this liquidity level. I don't have the rest of the chart, but it went down maybe another 30, 40 cents and then hit liquidity and then actually rallied the rest of the day. But again, this was a great, the whole setup was the gap, gapped up, should not be below VWAP, failed at VWAP twice, caught the nice move. It actually traded down to here, and then it was up the rest of the day. But this was a great 4-to-1 risk-reward trade. Next example is Apple, 129.20. Apple gapped higher after crushing its earnings per share numbers and raised guidance 5%. Apple tried to rally on the open and put a large selling tail on 7.6 times relative volume on the 5-minute chart, closing below VWAP. Two subsequent tries to rally above VWAP failed in additional selling tails and failure at large resting liquidity on the attempt at 8:42 a.m. Central. Aggressive sellers then engaged and pushed Apple lower to the first major liquidity at 323, were rejected at its first attempt. Moved back for one more attempt to push through VWAP. This time with weakened buyers that couldn't even push to the resting liquidity at 325, and sellers engaged again. Apple moved through 323 on next attempt and couldn't hold above, and moved to the next heavy resting liquidity at 322, where it couldn't hold below, and buyers stepped up above, coupled with the refreshing of the bid liquidity, which signaled an exit and was the low of the day. So this was the example I was trying to show you last time on the last example, where I said I kind of jumped the gun as far as, again, the parameters are you want to be waiting a minimum of 15 minutes below VWAP. In this, I got in here. And the reason being is if you start seeing these huge tails like this, especially on this huge volume where it can't hold VWAP, on this one, when you see the liquidity and book map, you'll see what I'm talking about. But this wasn't quite 15 minutes, but I got in just because. And I mean, it did come back again close to it, but I was in on these just because the selling tails, buying tails are very, very powerful. That means just immediate rejection, which means traders are caught offside, especially when you see 7.6 relative volume. So again, it tried to rally, on the quote unquote positive news, which it was. But again, it doesn't matter what the news is. It matters how the market's reacting. That's how you make money. So are you going to be the clown that buys this because of the news, or are you going to be the informed trader that sells it because this should not be holding below VWAP? So you can see here, this was the first move. Again, this was this move here above where it barely got above, and I saw this liquidity actually move above, selling, and the minute it started to sell back below, I'm in. My stop was right here. It sells off. It almost gets to this 323 liquidity. Buyers engage again. I'm still in the trade because I'm expecting, when you see this type of volume, you need to be expecting some outsized moves because these guys have to get out if they're wrong, right? So I'm not looking for $1 or $2 on this move. I'm looking for much more. So again, if it trades above here, I'm out. And then even better sign is once it did this, came down here, I was even more confident because this liquidity refreshed. So my stop was here to begin with. Now I have this liquidity to lean on top of it. So I was basically, here, of course, I'm starting to say, why is this coming back? But you can see, the buyers are not really strong here. These tiny little bubbles are nothing what they were the first time. As a matter of fact, it didn't even get towards, get near liquidity. If you're more conservative and you want to see a longer time period below, you could have gotten short here, but you may have missed this trade because it didn't get all the way up to liquidity. Again, you don't always have to wait for a move into liquidity. You can trade around kind of near liquidity if you see something like this where the buyers are weak. And then you see the selling come in, you can get in right here. And, this was 324.60, risk it to 325.10. You're risking 50 cents, if you decide to wait to this area. Again, don't cost yourself a trade because it doesn't trade up into this liquidity again. If you see weakened buyers and the sellers come back in, just pull the trigger and get in here, especially if you saw this first. But again, I was in here. I did not add here. So comes down here, blows through this liquidity. The buyers it tries to poke its head above, can't hold above there at all. The sellers engage immediately. Now it's down here. So I saw it trade through 322. I think of gold, and I think I'm going to get another $5 out of this trade. And lo and behold, pops up, comes back. They try again, kind of like they did here. But this time, look at the difference. Here, the sellers, pushed it through. This time, the sellers try to push it through. Now the buyers come back in right here. Liquidity refreshes. The sellers try again. No dice. Buyers coming again. I got out right here where the buyers engaged. I tried again. Rallied up here, came back down here again. I thought I cost myself money, but it actually held right around this area and then just ripped the rest of the day up. So again, it doesn't matter what it does the rest of the day. You made your, this was risking. I was risking when I got in here. I sold around 324.80. I was risking up to 325.10. So I'm risking 30 cents to make $3, right? And then I'm out. Again, you're not looking for, let this liquidity tell you when it's time to get out. Everybody wants to make 20 times their money. Just because you want something to happen doesn't mean it's going to happen. So let this liquidity, let the big money tell you what to do. And this told you right here, this liquidity was strong. Buyers were interested here. Again, this was positive news for the day, so you can expect, when you start to see the buyers engage, that could be it for the move, right? So these are short-term moves that you want to take advantage of, the clowns at the beginning of the day that get caught, and then, then eventually the buyers will win. So that's actually the last slide I have for this setup. Hopefully it was pretty self-explanatory. This is one of my favorite setups. It's very high risk reward. The risk reward is incredible, and you see this all the time. Especially stocks in the news. You always want to be playing stocks in play, stocks in the news, where the algorithms are not participating that day, and you get these clean areas where you can judge, what's going on. This is an incredible setup that happens basically every day. So in one stock or another. Any questions? Please send me an email, Scott@scottpulsanitytrader.com, and hope you enjoyed it.